Wake up.
I'm your host, Leisha Bell, co-founder of BLXVC, an angel syndicate run by Black and Latinx women who are on a mission to represent ourselves and claim our seats on cap tables. Stay tuned.
You feel me?
Hi, my name's Regina Green. I'm Managing Director of Investments at Catalyze. We exist to support emerging managers build and scale enduring firms. I'm really excited to be joining the Sisters with Ventures podcast today to talk about investing in and backing emerging managers.
If Pay Me in Equity was a person, it would look like Leisha Bell. The queen of deal flow and dishing venture dollars is known in part for the brains behind the $535 million PayPal fund that was generously distributed to the Black and Brown owned businesses subsequent to the George Floyd hearings. Her extensive background as a capital allocator, aka Tech Money Spenderella, includes Pipeline Angels, BLXVC, Black Girl Ventures, Pharrell's Black Ambition Fund, and Women of Color Capital Collective. And that's just a snippet of what she brings to her current role as a change maker for PayPal Ventures. Leisha Bell is the co-founder of BLXVC, an angel syndicate of moms mobilizing money for Black and Brown women entrepreneurs. She is the prior deal flow lead for Pipeline Angels, a network of women and femmes. And currently, she leads the Economic Opportunity Fund at PayPal Ventures. For more details, go to www.leishabell.com.
Hello, and welcome to another episode of Sisters with Ventures. I'm so excited today to have a very special guest, Regina Green. Welcome to the show.
Hi, thank you so much for having me.
So it's such an honor to have you here, because you represent another side of the VC ecosystem that we don't get to talk a lot about. So a lot of people talk about the founders or the fund managers, but we don't talk about the people behind the GPs, the LPs, and allocators. And so I'm excited to have you on the show for you to share your perspective of venture capital and why you're in this business. And I'm sure a lot will be inspired and to learn about you. But first, I want to know your origin story, where you're from.
Yeah, it's funny. I sometimes tell people I have a pretty boring origin story, but I grew up outside of Atlanta, Georgia. In a town called Marietta. Lived there basically my entire life through elementary school. Middle school, I was kind of a bit of a nerd. Loved math and trivia, which continues to this day. But I graduated high school in 2003, which feels a little bit like forever ago, and moved to New York. Went to NYU undergrad, which was a little bit unexpected and was kind of a very cool experience to spend my early 20s in New York City. Ended up majoring in math and economics, which wasn't my intention when I left for college, but ended up kind of being a precursor to everything I do now.
Right.
During college, I worked in politics a little bit, and really just kind of it was nearing the end of my time, started to think about, what do you do with a math degree and economics degree, which doesn't seem like it would be a hard thing to figure out, but it wasn't something I had planned. So, got involved in finance, did an internship at Goldman Sachs, and then ultimately started working at the firm there right out of graduation. And I worked there actually my entire career until last year. So I was at Goldman for about 17 years.
Wow.
Spent a lot of my time. Yeah, I mean, people are usually pretty surprised by that. It doesn't feel like something that people do these days, but a little bit of kind of in my genes. I think both my parents worked at the same company for 30 and 40 years. So I just feel like part of me is like, oh, I didn't get as far as they did, but no one's doing that these days.
Yeah, I did the same. I was with my first company for 15 years.
That's awesome. That's
And then
awesome.
they
It feels like a badge of honor.
Yeah, then they say you never be in another company that long again.
Yeah,
You don't
no,
have
truly. Yeah, so I was at Goldman. I probably did 4 or 5 different jobs over the course of my time there. spent a lot of time in the sales and trading business, specifically in like the interest rate part of the business. Had some other roles in our conflicts group, so focused on kind of risk management, making sure the firm didn't incur conflicts of interest or any reputational risk. And then the last role that I had there, I had the opportunity to work on an investment strategy that focused on underrepresented founders and fund managers, largely in the venture and growth equity ecosystem. So that's kind of how I started to make the shift into the world I'm in now.
Yeah. Tell me more about your journey into, I'm going to call it impact investing.
Yeah.
It's fair if you think so. How did you kind of get involved in that?
I thought a lot about, funny, I have one of those, like, I was sitting at home, locked away during the pandemic, and really started thinking about, the work I do, what I liked about it, and then also feeling like I had these other areas of my life where I felt like more meaning and purpose, and I wanted those two things to be more aligned.
Right.
So a lot of the time I spent at Goldman, I was doing things like helping with recruiting, helping people who maybe had no prior experience with finance prepare for interviews or figure out, like, could they work in finance even if they didn't study math or econ or a financial subject. And I felt like there were a lot of ways that the financial industry was seen as like this thing that was more of a headache for people, or what really wasn't providing the service and the value that we as an industry say we want to. And I really love math. I love working in finance. And I was like, breaks my heart when my friends are like too frustrated to think about their 401k. And so I really started thinking about, how could I bring these two things together? How could I, like, personally spend time making finance more approachable and accessible for people, and really like living up to what I think the values of it should be. And so when I was starting to like explore that, I came across an opportunity to join this team that I mentioned at Goldman, where we were focusing on trying to invest in founders and fund managers who had historically had been overlooked by the financial services industry. And, I think a lot of people think about it as like, an opportunity to, invest in a way that is like impactful, or there's like a justice element to it. And I think that's important as well. But there's a lot of ways where we have problems that don't get solved when you don't have perspectives and lived experiences represented at both as founders and as investors. And so that was something I really wanted to focus on.
Yeah, it's so important that you say that. And that's how we were introduced by one of the funds in our economic opportunity fund, Sand Ventures, said, hey, you should know Regina. You guys are doing some good work, backing some amazing people who should be backed regardless, point blank, period. So I'm really excited about that seat and what you got to do there. What was it like building that in entities such as like Goldman Sachs, which, I always see Goldman as like a very like refined, investment bank.
Yeah, no, I agree with that. I agree with that. In a lot of ways, like I thrive in a lot of like structure, and so I loved that. I think what we had the opportunity to do from that seat was think about all the resources of the bank and how we could help companies really early in their journey thrive and grow and scale. And so, a significant part of it was finding opportunities where we could invest capital, but we also had programs that allowed us to support founders with business development and advice. And so, when you think about all the different components of an investment bank, we had a number of clients who might be looking for new technology and solutions where those clients can be customers of startups. And so finding opportunities to make introductions there. Also investment bankers are always thinking about M&A activity and other financing. And so helping founders build with an eye towards the future of what their ultimate exit or potential strategic transactions could be. There's a really cool opportunity to foster some of those dialogues, introduce some of our banking teams to early stage entrepreneurs to help them think about the strategic and competitive landscape that they're building in. We ran an entrepreneur cohort that really specifically focused on helping Series A stage founders grow and scale, thinking about both revenue opportunities as well as financing opportunities and making introductions to potential investors. And then on the manager side as well, we had our fund of funds business that was making allocations to new fund managers. And then also thinking about, are there other LPs in our network that we can introduce? Are there events that we can host and really convene different components of the ecosystem, because Goldman is such a well-known entity and kind of has all these different clients and constituencies that it can bring together and potentially foster some collaboration across the space. So I really loved that. I thought, as a really storied institution that had been around for a long time, to be able to operate at this intersection from like that framework, and then some of the like earliest firms that exist where there's a lot of innovation, where can we learn from one another? That was really cool, because I just like love to learn and I'm a really curious person as well.
Yeah.
Hello, my name is Zora, and I will be telling you about my mom's new merch shop. Go to LishaBell.com. Thank you.
All right. So you said a lot of technical things, and we might have lost a few folks. So can you break down kind of the venture capital food chain and what roles do people play, so that we all understand the terminology?
Yeah, absolutely. So, I have a hard time sometimes explaining my job, but I've made a recent breakthrough with my mom. She's really gotten it. So I had some practice on this.
Yeah, we can talk to her. Yeah.
Yeah. So, I like to think about founders, company founders, as the people who are starting a new business. And you think about this as be anyone from, a mom and pop kind of store on the corner to, the big kind of tech companies that we think of, Facebook, OpenAI right now. The people who start those kinds of companies, we think of as entrepreneurs and founders. Typically, when they have an idea and they want to start that business, they need some money to buy all the products and hire all the people they need to build that business. And so they might reach out to different sources of capital. In some cases, in the mom and pop store kind of context, you might go to your local bank for a loan. And then in the more kind of technical or kind of media types of companies, you're looking for larger amounts of capital that's willing to be patient and wait for a long time before they start to earn a return or profit. And so typically we think of those sources of capital as venture capitalists. Sometimes it's helpful to think about it like the people you see on Shark Tank, right? When they are willing to give you an offer for a portion of the company, they are essentially making an equity investment or kind of purchasing a piece of ownership in the company. And what people, I think, don't think about very often is, where are they getting the money to do this? Obviously, on Shark Tank, a lot of them are independently wealthy and it is really coming out of their own pocket. But more often than not, they've gone out and raised money from other folks. And typically they've raised a pool of capital, which we often call a venture capital fund. And they have people backing them. Usually they're called limited partners. And that means like they're giving their money and they're agreed to be limited in terms of the amount of control or influence they have on deciding what's being invested in. And so that's where I spend a lot of my time, is trying to be a limited partner as people are thinking about starting their own venture capital businesses, and essentially trying to identify someone who has good insight or ideas on what investments they think will do well in the next 10 plus years, and being willing to write them a check and say, here's some money, go out and make some good investments. Keep me posted on how that's going. I want to understand what you're investing in, how the companies are progressing. And then hopefully over time, you can sell your shares in the company or your ownership interest in the company, or the company will, sell itself to a larger corporation, or do what we call an IPO, and essentially go from being a privately owned company into a publicly traded stock that you would see on the New York Stock Exchange or something like that.
Now, specifically for your fund of funds, where you're backing what we call general partners, what are you looking for typically?
Yeah, we're looking for folks who are kind of in the early stages of building out an investment firm. So yeah, general partners, as you mentioned, who might be on one of their first few funds. We're looking for folks who have differentiated lived experience or background that's giving them unique insight on what they're going to invest in. we typically focus on backing both underrepresented and innovative fund managers. So I think about managers who, their perspective, lived experience, or strategy is not typical in kind of the venture capital space today. That could mean they're, geographically in a different part of the country from Silicon Valley or New York. Could mean that they're approaching a particular sector industry that's been underinvested in. You're definitely seeing a lot of capital going into kind of areas where there's been kind of traditionally a lack of investment or technological resources. I've definitely seen some managers who are kind of in the supply chain and logistics space where we could really benefit as a society from more kind of technology. And I think definitely areas where we have really challenging problems. So you made reference to a manager that we both know in the healthcare space. I think there's no lack of agreement that healthcare is an area that continues to benefit from innovation, where we have really big problems that need to be solved. And I think often thinking about healthcare and then the broader care field, providing technology and support to families, allowing us to both educate and care for our citizens better. Those are some areas that we're interested in from a kind of sector thesis perspective. Or we're looking for people who have prior experience either investing, building companies as entrepreneurs or operators themselves, running their own companies, and are now looking to grow and scale an investment firm. My hope is that with capital and advice and resources, more people from underrepresented backgrounds or who are looking to pursue some form of innovative investment strategy can get the resources to grow and scale their businesses well.
And we should talk about your new role, because this is the context that you're speaking from.
Yeah.
Tell us more about your new role.
Yeah, so I just joined a company called Catalyze. We started in 2022 with an operating fellowship program that's targeted this exact population. So people starting new investment firms. Initially, we provided a program to help those managers, the investment managers, grow and scale their firms with technical support and advice. Helping people really think about how to build their firm with the operational excellence that limited partners that I mentioned are looking for as they invest in new firms. And as the team kind of ran their first few programs under that fellowship, really identified a need for a source of working capital. So, a source of funding that can really help people build and invest in their firm. Often there's kind of this chicken and the egg problem of you want to hire a team, you need to hire service providers, you need to hire lawyers. All of that stuff is really expensive. And until you kind of get your limited partner investors in the door, you don't really have cash to fund that. And so just this year, we launched a working capital loan fund where we're providing flexible and affordable loans to new investment managers to help build their operations as they grow and scale for their first few funds. So I'm really excited to be leading that investment effort. We'll be evaluating managers and really trying to identify ones who are well positioned to succeed and raise their fund, their first time fund, second or third fund. But they just maybe need some additional resources to be able to bring on additional team members before they've closed on all of the capital that they need to actually execute the fund.
Yeah, so let's take you back to your finance hat.
Yeah.
Like, I think we need to break down how expensive it is to start a fund.
Yeah, I'm sure it's not hard to imagine that, hiring lawyers, for example, is expensive, but or even like being able to hire a team member, unless you happen to be independently wealthy, or often you see someone who used to be a founder, they've had a successful exit, and so they've got cash kind of saved away for that. But we've seen that the cost of starting a new investment firm ranges anywhere from $150,000 up. And so we're excited to be able to make loans around that size to help people really invest in those initial kind of formation expenses, getting the business started and beginning to, surround themselves with the team and the support that you need to execute well.
So I think another thing we should provide clarity on is that general partners only make money in a few ways. Management fees, which are made off of capital calls, which come at a scheduled time throughout the fund's life cycle process, or they can exit in the portfolio, which is typically 5 to 7, 7 to 10 years.
Yeah, if you're 7+ years if you're lucky. Yeah.
And if you're an LP in that fund, let's see when you get your money back. Okay.
Exactly.
So it's really a long game. I think that's, when you start off talking about VC was patient capital, I think people probably would laugh if you put VC and patient in the same sentence.
That's fair. And there's definitely a lot of folks who are not feeling very patient these days for sure. But yeah, I mean, I think a lot of times, some people get involved in the space and they don't realize how long you're waiting until it really starts to be lucrative. There's definitely this perception of it being a high flying industry. And like, don't get me wrong, when things go really well, like they go really well, but there's definitely seasons. It can be very cyclical. So it has its ups and downs for sure. And it can take a long time to start to reap the rewards of these investments.
Yes. So I think that's very helpful context. And I think, also like a note of, I don't think empathy is the right word, but just a level of understanding for GPs who are independently wealthy or aren't well backed. It's really difficult to maintain a firm. They're maintaining their own startup that they're trying to build and scale, and fundraise, ask for money, and do these things with limited staff, right? Because she can't afford to hire people.
Yeah, I mean, we talk about that a lot. We at Catalyze, we've really built this firm on the idea that general partners, and you mentioned VCs, they are entrepreneurs themselves. We call them capital entrepreneurs, and we want people to begin thinking about them when you're raising your first or your second fund. You're in a lot of ways very similar to a pre-seed or a seed stage company, which is kind of like the company at the very earliest stage in their lives. So you've got to have an idea, obviously, that people think is attractive and interesting, and they're willing to put their money behind. But you do need a lot of advice and support and kind of coaching and perspective to build the company. It's just that the product and service you're offering, in some ways, you're kind of this marketplace matching the limited partner capital with the founders who are building companies that are interesting opportunities that for you to invest in. And so we really want to help people as they think about the broader operations of their firm. So, obviously you have to be a great investor. You have to be good at identifying investment opportunities, helping those founders grow and scale their businesses. But there's a lot of operational skill sets that also go into managing an investment firm, whether that's, hiring team members, how do you choose the right people? How do you help them become good investors? Thinking about all of the compliance and legal services around, managing other people's money, how you're reporting back to them. It's not an industry that is the easiest to navigate around. There's definitely a lot of legalese and jargon, as you mentioned. And so, how do you, from the very earliest days, put the right kind of protocols of practice in place so that you're building a high quality firm that, large asset owners and people with a lot of capital will want to entrust their money to.
Yep. That's the memo, folks.
Yeah.
A really difficult job. I love backing GPs and not being a GP because
their job's hard. Their job is hard. I have a lot of empathy.
So our time has really flown by here. Regina, I would love to, we always close out our show with asking, what would you tell your younger self?
I think I would tell my younger self to be curious, to explore the things that are exciting to myself, and not to be too worried or too anxious about trying to find the right path early on. My career has definitely taken twists and turns that I did not expect and could not have predicted. So I think just feeling a little bit more relaxed about the question of what do you want to be when you grow up, or what do you want to do? I thankfully don't have many regrets, but I think there are definitely opportunities I could have had a little bit more fun and just explored things that seemed interesting to me in my early days.
Yeah, that's a good one. Well, Regina, it's been lovely speaking with you this afternoon. I'm
Same
sure
here. Thank you so much for having me.
some more Sisters with Ventures to get in the game. We appreciate you and the work that you're doing so much. All right. Thank you. Bye.
Hey, it's your girl, Alicia Bell. Thank you for listening to Sisters with Ventures, where we amplify women of color in the venture capital ecosystem. We are on all streaming platforms available: Spotify, iTunes, Amazon, you name it, we're there.